Hey everyone, welcome back to Corporate Decoder. Today we're diving into McKesson's latest proxy statement. Are you ready to decode some corporate strategy and executive pay? Because spoiler alert, advancing health outcomes for all might just mean advancing executive bonuses for a few. Make sure to subscribe and hit the bell so you don't miss a thing, and for even more discussion, check out our Discord community linked in the description. Stay tuned. This report gives us a peek into how McKesson, a huge player in healthcare services, plans to run things. We'll be looking at everything from who's on the board and how much they get paid to what they see as their biggest goals and challenges. Think of it as a behind-the-scenes look at a company that touches almost every part of the healthcare system. McKesson really wants you to know that they're all about advancing health outcomes for all. It's mentioned a lot in this proxy statement. They're trying to set themselves apart as an exceptional place to work, in large part thanks to their employees. McKesson's success is based on their equal care values: integrity, inclusion, customer first, accountability, respect, and excellence, which are the foundations of its mission and the company's identity. They also have a common definition and commitment to leadership called ILED, or inspire, leverage, execute, advance, develop. They also say at McKesson, everyone is a leader. A bit PR-ish, so let's just keep that in mind. In this report, they include a personal letter from their independent chair of the board. The independent chair, Donald Nuss, thanked fellow shareholders for their continued support of McKesson. The company has been delivering on its strategic priorities, such as focus on people and culture, strengthen their North American pharmaceutical distribution, modernize and accelerate their portfolio, and enhance oncology and biopharma services platforms. He is very proud they had a 25% increase in their stock price. Now let's get into the business side. The annual meeting is scheduled for July 30, 2025. They will be electing 12 directors, ratifying the appointment of Deloitte & Touche L as their accounting firm, and having an advisory vote on executive compensation, also known as Say on Pay. The proxy summary boils down what we'll see in the full report. McKesson is focusing on 4 key priorities which are important to highlight. First, there's focus on people and culture, which basically means trying to make McKesson a great place to work. They want their employees to feel like they belong. Second is strengthen North American pharmaceutical distribution. They want to maintain their role with hospitals and pharmacies. Third, they want to modernize and accelerate the portfolio. This is a bit buzzwordy, but means they want to use technology and AI. Finally, they want to enhance oncology and biopharma services platforms, meaning they will invest in these key areas. Let's look at the numbers. In fiscal year 2025, McKesson made some impressive money. Total revenues hit approximately $359 billion. That's a lot of prescriptions. Breaking it down further, they really moved a lot of cash with about $6.1 billion in operating cash flow. In terms for average folks, $20 in free cash flow. In terms for average folks, $20 in free cash flow. In terms for average folks, $20 the annual report is called for eventures. And sure enough, McKesson shared the wealth via shareholder return. They returned approximately $4.1 billion to shareholders and bought back approximately $3.5 billion in shares. They really try to reinforce those values from earlier. A key highlight is that their McKesson Foundation disbursed approximately $11.3 million in fiscal year 2025 to several organizations. McKesson really values feedback from its shareholders and has reached out a lot over the last fiscal year. The governance and the investor relations teams spoke with shareholders representing 34% of their outstanding common stock on governance-related topics. The key highlight that came out of all these meetings was that shareholders wanted to see more of board composition and refreshment, AI and cybersecurity, executive compensation, human capital management, and emissions reductions targets. Now, let's dive into item 1, election of directors. McKesson has 12 director nominees, 11 of whom are pretty independent, which is good. We see they want to refresh. Roughly about 64% of director nominees have a tenure of less than 5 years. Let's quickly scroll to what McKesson says about their skills and expertise qualifications. A lot of the board members have executive level experience. Several board members have healthcare experience or are at least connected. Roy Dunbar is also on the board with technology experience. McKesson lists their leading corporate governance practices, which include independent chair of the board, regular executive sessions, shareholder rights, and no poison pill. The board recommends voting for the ratification of Deloitte & Touche as the company's independent registered public accounting firm for fiscal year 2026. Item 3 is the advisory vote on executive compensation. This is where all the fireworks start. It's the say on pay, and the board recommends a vote for their executive compensation plan. Now, they are highlighting that their shareholders expressed a support for their compensation structure, so they didn't change anything this cycle. They are sure to hit us in every way they could how much they value pay for performance from their executives. Predominantly, the pay consists of base salary, an annual cash incentive called a management incentive plan. Performance expectations are based on adjusted EPS, adjusted operating profit, free cash flow, non-financial priorities, and MCK TSR versus Compana Group. Scroll name tag key governance attributes, key governance attributes, key governance attributes. McKesson loves highlighting governance. They have a leading corporate practices which include proxy access right, no poison pill, regular executive sessions of the independent directors. Seems good, but keep this in mind with the rest. Next up, item 2, ratification of appointment of Deloitte and Touche as the company's independent registered public accounting firm. Basically, they're asking shareholders to approve their choice of auditor. D&T is a big name. As let's peek at the numbers, audit fees came in at $15. Let's peek at the numbers, audit fees came in at $15. It goes on to talk about the audit committee. The accounting and finance members of the board are all on the committee. The key purpose is to ensure the quality and accuracy of the company's financial reports. All of their actions were reviewed by the audit committee. We now get to item 3. The meat and potatoes, executive compensation. In year 2025, the top executives at McKesson were Brian Tyler, the CEO, Britt Vitalone, the CFO, Michelle Lau, Chief Legal Officer, Leanne Smith, Chief Human Resources Officer, and Thomas Rogers, Chief Strategy and Business Development Officer. McKesson's goal is to become a diversified healthcare services company. They have 4 main priorities to lead them to their goal. Focus on people and culture, strengthen North American pharmaceutical distribution, modernize and accelerate the portfolio, and enhance oncology and biopharma services platforms. In fiscal year 2025, McKesson really made a lot of money. Their revenues reached $359 million, with big profits coming as well. I highlight this because you need to ask, what are they actually doing? XC dollars, what are they actually doing? Now let me talk a little bit about the advisory vote. In the last say on pay, 90% of votes approved their executive compensation program. However, despite that approval, the advisory vote is only that. The executive have a plan set that balances what to do. It aims to attract people, drive metrics, and reward sound investments. Let's talk about the annual incentives. These are paid in cash. Here is a chart from what they made this recent year. Brian Tyler, the CEO, topped the list with $1.5 million. Their incentive plan metrics are adjusted EPS 50% of award, adjusted operating profit 25% of award, free cash flow 25% of award. It seems like there is some adjustment for non-financial goals. For the long term, they also focus on 3-year results like earnings power every. Moving on, here are the main items that executives use to defer their income until later. This can have big impacts on what people ultimately are taxed on. They have an independent compensation committee to ensure oversight and fairness. The goal of this committee is to benchmark pay practices. One of the people on this committee is a former CEO, so he knows his stuff. However, he ultimately relies on data provided by management. The management has skin in the game to push lower amounts. In case they get fired or take over, there are good rules to protect the company. Not always great for executives. However, the golden parachutes can be huge. Here's a fun fact. The CEO to median employee pay ratio is 295:1. For every $1 made by the employee, the CEO makes $295. It's a lot of jumping through Excel sheets and charts and fancy governance definitions. They highlight science-based targets while making huge profits. They also talk about ethical GUI lines for AI while using algorithms for business. Now, looking at these results more broadly, McKesson appears well positioned for growth. It operates in a consolidated and essential industry, has high rates of reinvestment, and pays huge bonuses. McKesson is really trying to sell you on the optics that they are doing good for the world and are an ethical company, but let's look at the numbers. What is really telling from the report is the disconnect with the CEO's performance. It doesn't seem to matter that much. He makes a lot even if their numbers are so-and-so. As an investor, one should ask, are good optics more important than actual financial strength and profit? Is this a management team that can withstand crisis or bad market conditions that can make the right call now? Alright, that's our breakdown of McKesson's proxy statement. What's your take on these numbers and what they signal for the company's future? drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.